Hi everyone, my name is Asad Sultan. I'm the co-founder and CEO of Verdana. Thanks for 30 minutes of your time today to go over our Series A fundraise, highlighting the key elements of our proposition, the customers that we have on our platform, the milestones that we've achieved, and where we think we're heading to with this venture. To start off with, let me define Verdana for you. We are a financial services company built around carbon credits as a product. In order to do that, we have also created an entirely backward integrated digital platform that reports carbon credits, that processes carbon credits at the highest integrity level, fully certified carbon credits, productizes and delivers that into marketplaces. A little background on the company: we were formed in 2022 in January. At that time, the co-founders, myself and Brahm Singh, the chairman of the company, invested up to $1 million in the company now, starting with promoter capital of $200,000. A few months afterwards, we successfully closed another close to $1 million in an angel round, earlier this year, at the beginning of 2024, we also successfully closed a seed round of another $1 million. So that's $3 million of capital gone into the company, along with the technology platform that we developed to get us to the point where we are now, having acquired some major customers to take this into the growth phase of the company. Market timing. Well, I don't know how familiar you are with the carbon credit marketplace, but it has been a wild ride. For 20 years we were in what we call, or what I call anyway, the carbon 1.0 phase of the marketplace. It's amazing to me that it lasted as long as it did without being called into question, but it really was what I characterize as the Savile Row Tailors phase of the marketplace, where there were a bunch of few fat cats colluding with each other, generating a highly engineered, high margin product that really wasn't accessible to most participants in the carbon marketplace and never really got to scale. Well, that was all called into question in the last couple of years. We were just at the right place at the right time, I guess, because as soon as Verdana was introduced as a digital, transparent, open, scalable solution, those were the discussions that were brought into the marketplace by the excellent reporting by The Guardian and many other newspapers like the Wall Street Journal, the New York Times, and it became part of the public debate around greenwashing and the integrity of the carbon marketplace. Well, that now sets the stage for Carbon Market 2.0. If Carbon Market 1.0 was Savile Row Tailors Club, Carbon Market 2.0 is more what I call the H&M phase of the market. It's going to be scalable, standardized, cheap, easily accessible, and essentially good for new entrants coming into the marketplace, new asset classes coming into the marketplace, bringing efficiencies, transparency, bringing liquidity, all things that the carbon marketplace is screaming for. As a relatively new participant in the carbon marketplace myself, it was apparent to me how dysfunctional this marketplace really is and how inefficient it is. And I, did spend 18 years before this, with big banks sitting on trading desks, trading equities and derivatives and other sophisticated financial instruments. So it was very clear to me that the carbon marketplace lacked and still lacks much of the functionality and the sophistication and the tools really that other conventional large asset classes have. And if carbon really is going to be this big asset class and this huge marketplace, then we better fix that. And that's what Verdana is doing with our platform. So how do we do that? Well, the idea we have, the secret sauce, if you will, on the platform side, is that we started by Verdana started by developing a emission management reporting tool for data centers. Data centers use a lot of power. Their customers are very, sustainability sensitive. and the jurisdictions within which they operate also require data centers to optimize their power efficiency, use less grid power, add more renewable power, things like that. So they're spending a lot of money creating these interventions or additionalities to reduce their power footprint. And so reporting on those carbon emissions was the first step. Now, it just so happens that if you are doing this for data centers, you're also doing it basically for the entire commercial facilities asset class, office buildings, malls, residential complexes, all of which account for 40% of man-made emissions comes from this sector, 40%. And, but they're largely underrepresented in the carbon credit marketplace. So this is, again, a big white space that we look to fill. The Verdana emission management system was built as a tool for reporting JG compliant emissions for data centers and other commercial facilities. We realized pretty quick on that, hey, that's not enough, right? The asset owner, at the end of the day, reporting, there are 101 guys doing DMRV or MRV solutions, and that's not the differentiating part. The asset owner wants you to take him down the value chain, downstream into monetizing, as close as possible to monetizing those carbon credits. So in addition to reporting, you have to then process, convert those carbon emission reporting into compliant methodologies, process those carbon credits at a very high integrity level, fully certified carbon credits with all the accreditations like ICROA and Corsia, so that they're vendable in the marketplace, productize that in a way that it can be delivered into multiple buyer communities, and ultimately achieve what the buyer really wants, which is three things. He wants as many carbon credits as possible for his additionalities. He wants the best price possible for whatever it is that he's doing to intervene and reduce emissions, and he wants that money as quickly as possible, don't we all? So, our Verdana proposition, when I say we're a financial services company, it's about delivering that turnkey solution for the asset owner, taking them all the way from reporting to processing and delivery of the carbon credit monetization. We have done this by system integrating the various service providers, whether you're a PDD or a DMRE for that matter, a PDD, a standard body, registry, even a marketplace. All system integrating into one common digital platform, a common digital rail, if you will, where each service provider maintains their own independence, their own integrity, but at the same time they're interconnected so that the process is streamlined, it's cheaper, it's scalable, it's it's more efficient, it's more timely, and it's automated, right? This is a marketplace that is like a cottage industry. It's totally analog and everyone's doing their own thing in their own bubble. It occurred to us that why not put all of them onto one integrated platform, sort of like the Bloomberg of the carbon marketplace, the way we characterize it. And that idea culminated in our product called Echo Consortium, which we launched in June 2023, and which has since been now adopted by the Hong Kong government and the Hong Kong marketplace, which we'll talk about in a second as well. Coming to our client base, we have this year gone through several milestones of success in client acquisition. These are clients with billable contractual agreements that are hardwired into our into our service offerings. So our products are now contractually integrated into servicing these customers. To start off with, we have the World Bank as our anchor or cornerstone customer. We've been lucky enough to have the privilege to work with them for almost 2 years now as the sole source provider of the Low Carbon City project, a scheme which the World Bank is introducing to reduce urban power emissions across citywide areas, thereby resulting in a large pool of high integrity World Bank branded carbon credits, bringing an entirely new asset class into the marketplace in an extremely significant way. This LCCP, Low Carbon City program, is currently in the pilot phase in Ho Chi Minh, Hanoi, and Bangkok, and we plan on, or the World Bank plans on, expanding that into other territories and ultimately for the world to adopt. So whereby participants in this program adopt the World Bank scheme and measures for reducing power consumption, thereby reducing power consumption on an aggregate basis and creating efficiencies that are significant in scale. Second, earlier this year in June, we signed a client agreement with Indo-Kayude. Indo-Kayude or Indo-Kud is the world's largest small farmer cooperative in Indonesia. It has 13 million members and 60 million family members. The chairman of the advisory council of Indo-Kud is the president of the country. This is a powerful organization with tens of millions of hectares of agricultural land under their purview. It's a significant asset to work with, and the reason why they chose to work with Verdana and assign us the task of monetizing this carbon credit potential of their asset base is not just the sustainable agricultural processes that have been proven elsewhere that we can integrate into their various asset pool like paddy farming or other agricultural farming, but also the carbon finance solutions that we can introduce by taking these assets, using them as collateral to raise green finance and generate an immediate return for the stakeholders in doing so. And we'll talk about that a little bit more. That's if one secret sauce of our solution is the integrated eco consortium platform for carbon crediting or for carbon credit processing, then the second secret sauce is certainly the carbon finance solutions that Verdana has aggregated together as a combined asset management solution. I mentioned the Hong Kong government essentially using the Eco Consortium platform, or Eco HK or ECHK as we call it, as the carbon crediting platform for the for developing Hong Kong as a leading carbon credit marketplace, bringing in stakeholders like the Hong Kong government, the Hong Kong Exchange, GCC, one of the world's premium standard bodies from Qatar, as the standard body and the registry for the platform, bringing the Hong Kong Science and Technology Park for the research and methodology center for new methodologies that can be introduced into the standard body, targeting projects from Greater China, mainland China, elsewhere in Asia, and thereby delivering those credits into the Hong Kong Exchange and making it a leading marketplace for carbon. Carbon exchanges are a dime a dozen, we know that, but the liquidity on carbon exchanges is missing. We all know that 95% of the carbon marketplace, the voluntary carbon marketplace, trades OTC on individually negotiated offset agreements. Well, the development of the secondary market, creating liquidity into it, routing those trades through an exchange, all of those are essential if carbon credits are going to emerge as a significant new asset class with transparent pricing, with with enough liquidity, and again the hallmarks of what's needed to become an institutional grade product. Zoetic is my favorite customer because they're also my investor. Leading clean tech company from North America that provides refrigerant solutions, green refrigerant solutions that reduce the load on HVAC systems and thereby save power and generate a large pool of carbon credits. Also provide green hydrogen and water remediation solutions, a whole range of a catalog of clean tech solutions that generate a large pool of carbon credits. As a client of ours, they assigned us the task to manage this entire pool of carbon credits, to do the reporting, processing of those carbon credits, and the market making and asset management of that. A fully integrated solution, and also recognizing that this fully integrated solution is pretty neat. It's going to result in quite a lot of revenue being generated from it, and which motivated them to become also a shareholder of ours in the seed round. And at the beginning of this year, we were approached by a Calgary-based oil and gas company that has oil sands concessions in the province, with the idea that, hey, what if we kept this carbon-intensive asset in the ground, and took carbon credits from it and sold that to cleaner oil producers? Would that work? And we said it's a good idea. They're doing that with coal and coal sequestration, etc. But there isn't a ready methodology for that. So we wrote one. We wrote it from the ground up, delivered to them a methodology that was then peer reviewed by the leading experts in the space, was marketed to the leading standard bodies, and ultimately now is in the final approval stages as an approved methodology to be added to the catalog and library of methodologies, thereby bringing a entirely new asset class into the market, a significant one that has the potential for really moving the needle. And I think for our own purposes, leaving the market aside, it gave us a lot of confidence. We went through a big learning curve with this, and we felt that we could hold our own in terms of introduction, fulfilling our vision and mandate of bringing significant new asset classes into the marketplace, and and occupying a lot of the white space that is being created from the diminishing role of nature-based assets as the dominant only source of carbon credits in the marketplace. Ultimately, going forward to 25 and 26, thinking forward, we really look at ourselves as the first carbon merchant bank or investment bank, really the first carbon bank. That's the way we think of ourselves, having a carbon finance window, issuing green finance bonds, Islamic sukuks, productizing carbon credits through securitization or through tokenization of carbon credits. That's what we want to get to, and we believe, once we achieve that, we will become an extremely attractive acquisition prospect for any financial services institution, a bank, a financial services company, a fund that wants to be in the carbon marketplace. Maybe we'll become something like an Aladdin for BlackRock, but in carbon. So getting towards that, we have a lot of other cool ideas that we want to bring to market. For example, issuance of a digital certificate of carbon credits based on high integrity, fully certified ICROA, CORSIA approved carbon credits that can be sold to SMEs, for example, as an offset. Taking carbon credits and neutralizing or net zeroifying carbon intensive products that financial services companies or funds buy. For example, BTC, ETFs have been one of the most popular products this year, 50 billion of it sold. And for funds buying that creates a huge carbon emission footprint on their balance sheet, on their funds. And if we can use carbon credits to offset the carbon footprint of those carbon intensive assets, then we're making this a much more attractive investment prospect for those funds. That's a big idea in and of itself, just taking carbon credits to Bitcoin ETFs and net zeroifying it with those. Tokenizing carbon credits. We're not a crypto shop, we're not a tokenizing shop, but to the carbon credit backed tokens will become a significant part of the digital asset class. And our job, Verdana's job, is to ensure that the carbon credits that we deliver into the tokenized market will be of a very high integrity, will be fully certified carbon credits, so that we avoid, any problems about the product not having the right integrity of underlying assets, like we had in the global financial crisis. It says 10,000, AAA mortgages. When you open up the tin, it's only got 1,000 AAA mortgages, then 9,000 pieces of junk. Well, Verdana carbon credits, because of our commitment to only working with fully certified high integrity carbon credits, to the extent that those are tokenized, digitized, and offered in the marketplace, you're going to be able to trust that they are based on high integrity underlying assets. Okay, our carbon finance solution. Then we spend a couple of minutes on that, and then we move right into the financials and our revenue numbers, how we're going to get to it, and what it is that we're really looking for in the Series A round. But first, the carbon finance solution is the second secret sauce in the ingredients of this solution. The first one being the integrated digital rails of the carbon crediting process that Eco Consortium offers, and now the Hong Kong government has adopted. The second one now being the carbon finance solution that Indocould is adopting and that we intend on bringing out with many Wall Street and other high pedigree, high quality financial services partners. So how does this work? Today, the problem in the carbon marketplace, especially in the transition that we have from carbon 1.0 to carbon 2.0, is that it's a risky business. You have to spend a lot of money today to get carbon credits tomorrow. You don't know what those carbon credits are going to be worth tomorrow. So there's that market risk. The equity market risk, especially in the downturn that we've experienced in 23 and 24 in the voluntary carbon market, that equity market investment risk is diminished, right? There are fewer and fewer institutions willing to take that legging risk of investing today, getting carbon credits tomorrow. And, there are a whole range of issues around that even make it more risky, which I won't get into now, but it's a risky business on the equity side, making equity market risk investments in carbon credit projects. So our solution is to turn this into a yield product, to turn carbon finance, which is a debt product, into a high yield generating income stream from market making and other asset management activity in the carbon credit marketplace, which allows us to cover the cost of capital, to compensate our stakeholders, to reinvest in the underlying assets, thereby creating a larger pool of high integrity carbon credits, which then keep that cycle moving. This is the solution that we have. It's a solution that is being adopted around the world by various financial institutions, and we are at the cold face of it. Before it becomes a standard high street banking product, we are the architects of showcasing the solution in the marketplace with significant customers like Indocould as partners to do this with. So this is definitely a very exciting piece, and this is also a very remunerative piece. When we talk about the revenue targets that we're looking to achieve, when we talk about the growth that is possible, the headroom and valuation that this business can achieve, we're talking about how this solution can be brought to market and scaled up. Okay, so let's go into the valuation and the revenue story. Let's go into some of the questions that inevitably come up from the investor side. And obviously some of this we'll go into greater detail if you're still with us in the story and you still like the story and you want to get deeper into it, then we'll get you guys behind an NDA, we'll get into the weeds, we'll share our historic financials with you, our current revenue run rates, and how those underlying billable customer contracts with the World Bank, with Indocould, with Zoetic, with Hong Kong government, with Tejas, how they get us to the 2025 and 2026 revenue numbers in an extremely credible bottom-up way. This is not a top-down pro forma estimation or guesstimation of what percentage of some theoretical marketplace we're going to achieve. No, this is based on our signed contracts with customers that we are using on a bottom-up basis to generate an achievable revenue number for next year, for the year after, based on our current run rate and based on our current credits that are already in our processing pipeline that will be delivered into the marketplace within 12 months, within 24 months. And guys, by the time we do that, we are already a validated, valuable company. So this is the moment in time to understand this, to get ahead of this, and to check me on it, to test whether or not this can be achieved. We know it can be achieved. We have the customer contracts. We've got the high pedigree clients. We've got the products. We now need this A round successfully closed in order to deliver on that go-to-market and scale. Totally, logical, reasonable phase of the business. And in fact, we've compressed this because all of this, which usually takes 5 years to achieve, we've achieved since 2022. We're not because we're geniuses or anything like that. We happen to be, again, touch wood, at the right place at the right time for a change. And we're taking full advantage of the wind at our back to scale this business up. So we put a valuation comparable table together. You can see there's a peer group of companies that do similar things that Verdana does in different marketplaces around the world. And despite the fact that the carbon marketplace is not a fully developed marketplace, far from it, in fact, the big outsized growth is going to come out now in the next 3-5 years. But despite that, these are richly valued companies between, you can see between $50 million to $500 million. Now, I'm not telling you what Verdana's valuation is. I'm simply saying that this is the, companies that are comparable to us have achieved significant valuation thresholds, and we have every legitimate claim to be in that range based on our own achievements, our own milestone progress, our own customers, and our own revenue, run rates and targets. But this is a valuation discovery exercise. I'm a practical, business owner and business executive. I want to get to the next stage of my business as quickly as possible, go to market, scale up, make my customers happy. In order to do that, we obviously need to lift up our operational capabilities to scale up our business and to have the capital and enough fuel in the tank to get there. So this valuation discovery exercise is based on exactly what I've already, just let me summarize it again. It's a bottom-up exercise based on billable customer contracts, already hardwired into our system with high pedigree customers signed up, ready to go, right? We are shooting for a $20 to $25 million revenue target next year. This is based on a current 7-figure revenue number that we booked for this year, plus an 8-figure pool of carbon credits that, once certified, can be monetized, which we have also booked as revenue this year, but we've taken a very conservative, kind of fractional value for it. We're not trying to be cute here. We're just showing you that we've achieved, significant revenue this year. We've got these projects already in our pipeline. They are normally going to go through a timeline of being processed and delivered into the marketplace. So we can tell you with a high degree of predictive assurance that these credits are going to generate a certain value when they are delivered to market, and that equates to a $20 to $25 million revenue target for next year and a $50 million target for the year afterwards. That's once we've established that revenue run rate, guys, we're there, right? So this is the investment moment to get to that point to achieve that. We've summarized some of our financials for you. There's an asterisk in the 2025 column because our audited and unaudited and our management accounts, all there for you to review once you get past an NDA and go into the weeds. We have a virtual data room that is accessible to anyone signing an NDA and wishing to get into it, in which all the key commercial contracts, the financial modeling, the information memorandums and associated documentation, it's all in there. So we've organized that so that we can streamline as much as possible the due diligence process for you. But we're offering to you, some headline numbers like the $25 million or conservatively a $20 million revenue target for next year, and a $50 million target. Now, I don't know if we're going to end up getting to a $500 million enterprise value in year 5 or not, like our modeling tells you. But I do know that after I hit my 25 and 26 numbers, which I have a great deal of confidence that I can achieve based on my, billable signed contracts with customers, I do know that once I do that, I become an extremely attractive acquisition prospect, and I become a valuable company on my own, based on just those own numbers and that run rate that we're achieving. It's not just a revenue story. That's one valuation methodology. In addition to that, I'm also showcasing to you our current asset value, comprised of the technology platform, which is patented in Singapore, also comprises our emission management reporting system, our carbon crediting platform, and our market making activities. All of that integrated together is being third party valued by an IP valuer. We put it conservatively on our balance sheet at about $18 million. I have, in addition, another $20 million of carbon credits that are not yet certified, that once certified will have a market value in that indicative range. I'm taking just 1/10 of that on my balance sheet right now, just to be super, super conservative. That takes me up to, $20 million bucks. I have another $5 million of market value equivalent to the Hong Kong platform, Echo HK or ECHK. That's again a super conservative number. That takes me to $25 million. And then we have Indocood. I mean, this is a huge asset base to work with. I'm not trying to be cute and tell you, give you some parabolic number or some hyperbolic number rather on it. I'd rather, we have a discussion as to, it's a non-zero number, and it could be a very big non-zero number, but let's see what it's worth. We are a company that has enterprise value already, close to $100 to $125 million. We have a 5 times revenue over next year's, a 5 times multiple over next year's revenue target that takes us again to that same $100 to $125 million range. That's our indicative range. I'm not saying that that's our valuation. We're not prescribing that. We're simply saying that let's go through it and come to a reasonable valuation number that's a win-win investment exercise from you and from me. We can get to these numbers, and we can show you how we can get to these numbers. So that is the message here, that we've done the work to showcase the products, the revenue streams associated with those products, the customers, and now we just need your help to make that vision a reality. Thank you very much for your time. I really appreciate it. I'd love to see you in person or speak with you and get this party started.